Hello everyone, how's it going? In this video, we're going to talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through very volatile swings recently, and one of the most talked about and sought after stocks is Palantir. In this video, we will go through what the company does and what it represents, the recent price action, the company's financials, and my recommendation regarding whether it should be bought, sold, or held. If you appreciate my content, please consider to drop a like, comment, and to subscribe to my channel. Also, please check out and use the links in the description section, as every help is greatly appreciated. During Wednesday's trading session, Palantir was able to increase its stock price by another 4.3% in the stock market, which continues its ascension that began a few weeks ago. The stock has been sitting on the $16 line, in my opinion, at a sustained manner, and is likely to continue on for the foreseeable future. It kind of shows how Palantir remains a stock that sits highly in people's subconscious mind, and that as soon as there's an opportunity to build a positive narrative, Palantir is one of the first who dips into this benefit. In the long run, I think that Palantir is a company that has shown its capacity to attract capital and to also generate revenue. Regardless of the market situation, I think that Palantir remains an interesting stock that definitely deserves to have a place in our portfolio. With that being said, I think that the real question is for how much and how long. So we should wonder, what's going to happen if the good news didn't happen. If Palantir didn't present the financial statements during the first quarter of 2023 that we now see, would our current assertions still hold? Right? It's an interesting question to ask ourselves, and to be honest, I think that the current recovery wouldn't have happened, and this current trend-breaking, trend-reversing price action wouldn't be a thing. But now that it is, there is an argument that says we should definitely build on that, and I think that the market is ready to build on it too. So Palantir is basically a stock that needs enough slightly positive news regarding the company itself or the sector at large. So as long as one of the two requirements is met, I think that Palantir is not going to disappoint us. Another thing is, given the current state of the capital market, I do believe that $25 to $30 would be a good region to, to foresee the pullbacks to start appearing. Now, let's also take a look at the technicals of Palantir. So, as far as Palantir is concerned, the trading volume has been 91.2 million shares versus the average of 118 million shares. Over the past 52 weeks, the price fluctuated between $5.84 and $17.16. The volume of shares traded tells us how many shares are being bought and sold at any given time, and if there's enough liquidity to support a strategy. If the float is very thin, it could be very easy for us to influence the stock price, but the exit plan might be challenging. When we compare the current volume against the average, there might be the possibility for trend reversal or breakthrough if the difference is very large. For instance, if the stock were to break through, the current volume would be significantly higher than the average volume. The market cap is currently $33 billion versus $15 billion in enterprise value. In other words, Palantir in the stock market is trading more than the double of its worth on paper or in its own books. As we compare the current price to the historical price fluctuations, Palantir is currently trading at 77.3% higher than the 1-month low, 120% higher than the 3-month low, and 173% higher than the 52-week low. On the options market, which gives us a hint on the market sentiment about where the stock price is likely going to head toward, the implied volatility is 73% versus a historical volatility of 83%. The put-call volume ratio is currently around 0.35. It's common for many stocks to actually have a higher put option volume than what they truly should have in order to hedge like the existing long positions. The most recent volume of options traded has been 403,000 contracts in a day, compared to the 30-day average volume of 584,000. Regarding the open interest, the most recent volume of open interest is 3 million contracts versus the 30-day average of 2.5 million contracts. So, regarding the shareholder structure of Palantir, institutional shareholders currently own about a third of the float. The biggest ones include Vanguard, Renaissance, and State Street. Typically, it is best to see some institutional participation in the company's equity, because this offers us a layer of stability and also legitimacy that we definitely need in order to give capital for long-term commitment. It means that the market is currently confident that it'll deliver value in the long term, which is an important factor to consider for investors. I believe that the minimum threshold to be around should be around 25 to 30%, which Palantir does qualify. So this means that Palantir does have a long-term play in addition to the current momentum or the current price action. If we look at the long-term price action of Palantir, we have to ask ourselves whether this company will have a place in the economy of tomorrow. Because we already know that Palantir will not be profitable for the next few years. This is already priced in. We know that Palantir is in a highly sophisticated area of the economy, and that it aims to become an analytic board for the wealthiest entities on the planet. The true debate is whether Palantir itself can stand the test of time and to actually play this role, and if the market believes that it'll play this role. So Palantir fell by almost 80% from the peak of the share price, from around $35 down to $7.28. Much of it is due to the overall market trend, and the rest is caused by doubts on a company's growth potentials, as well as its business model to work with government agencies. I believe that Palantir has been testing its bottom for some time now, and that the downward slope finally stopped its progression over the past 6 months. Ever since, the price has been hovering between $7 and $8, but is definitely hesitant in going below $7. Does it mean that the stock will reach new highs very soon? That new recoveries will start immediately? I don't think so. On the other hand, I do believe that Palantir will have a place in the future and that significant changes will occur at some point. Given that it's been down by so much, the only logical scenario is a price recovery once the storm is behind us. This, however, hasn't happened just yet. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance, healthcare, and defense. The company's flagship product, Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is the ability to integrate data from a wide variety of sources. The platform may work with structured and unstructured data, including text, images, and videos. It can handle data from multiple formats and languages. This makes Palantir the ideal solution for organizations with data spread across multiple systems, languages, departments, and formats. Palantir's solution is widely used by government and intelligence agencies, as well as major financial institutions, consulting firms, and other organizations around the world. This is due to the platform's ability to help make sense of the data that they have and to identify patterns and trends or causalities that might otherwise be difficult to spot. As we look at the company's financials, something that is very noticeable for me is the positive gross margin. Above all else, this is a very good reminder to us that Palantir's core business model seems to work. It is true that the revenue has been growing slowly over the past few quarters, but the fact that the gross profit that is positive, suggests that the main issue now is the scalability and diversification of the operations. We have to remember that Palantir's revenue has been able to grow despite the fact that there is a de facto recession in many parts of the world, suggesting that its clients are relatively robust and resilient. The cash flow reports also suggest that despite having a net loss, Palantir can self-finance significant portions of its operations with positive free cash flow of its own at the end of each quarter since Q1 of 2021. This would mean that the pressure for Palantir to go through rounds of share dilutions can be relatively low, which is a very good thing for shareholders. Another significant aspect to consider would be the liabilities Palantir has on the books. They are very well controlled. So currently they are a little bit more than $900 million. This is normal considering the size of its businesses and the growth that it had over the past few years. I would say that Palantir has a decent chance to become something that we should invest in because there is around 34% of institutional ownership amongst the shareholders. This means that Palantir does have significant endorsement from money managers, but they're largely outnumbered by the retail shareholders, that there will be a significant chunk of people going in and out of the stock market based on market movements and short-term price actions. This also means that even though it might be good for investment, and I would highly recommend you to see it as an investment stock, beware of people who still hope to profit off the swings, and don't blink when small volatilities occur. One significant difference between the institutional and retails is their investment horizon. Institutional shareholders can afford to wait for sometimes decades before things blossom, whereas retail traders tend to go in and out. Another behavioral difference is how active they are in the governance. Institutional shareholders are more likely to vote on important matters and decisions, whereas the retail shareholders tend to not bother and to simply wait for things to happen in their favor before they cash out. So my recommendation would be to hold on your existing Palantir position and to also add new exposure in the company if you haven't done so already. But beware, I would prefer that the increase in exposure would stop at $20 in your ACB. So I would recommend to commit between 3 to 5% of your portfolio in Palantir and then to hold it for at least 12 months. Of course, split them into smaller batches of allocation so that you can purchase more in case of retracement.